members. Hope you're good. It has been a while ever since I did a video, but we have been live on TikTok every day doing the Forex skills, teaching 1, 2, 3 about on how to trade. So yeah, it's recording. Nice. So I've taken my time and I want to do this simple strategy channelization, the one that I see it's a very good strategy for beginners and also advanced at some point. So the only thing that you need to understand in this channelization strategy, I did a video earlier on, but now this is just a reinforcement video, yeah, to add some few things on top of the other video that I did. So let's start. Kindly, if you're new to this channel, you can subscribe, and also for those who needs to be mentored on how to trade the synthetics, kindly you can follow our group on Forex Nexus, join us, then we'll trade together as a team. Free signals are given there and all those things. So let's start, guys. Before I start, let me first give you a small intro on what I'm going to talk about. So we know that the synthetics market and the Forex market, basically they move in three major directions. And these directions, the first one is what is called the uptrend. And the market usually moves like this once in an uptrend channel. This one is just a picture. The market usually doesn't move like this, but it's just a picture to explain to you guys how it works. So once the market is moving in such a manner, this is a clear what? This is a clear uptrend. As we can see, this is a clear uptrend. So once a market is moving in a clear uptrend, we call this an uptrend. Yeah? This direction is an uptrend. And once, if market is not moving in an uptrend, the market is being what? The market is consolidating or ranging. But I'll use ranging for now. And the third move, the market is the downtrend. It's a simple thing, a very easy way to tackle the Forex market or any other type of market. Now with these three, yeah, we are able to tell the direction of the market, and we are able to predict what will happen next to the market. So let's start with the uptrend. So when market is moving on an uptrend, it moves like this, yeah, as I've drawn earlier. Now there's an uptrend. Once you identify the uptrend, now these are the steps that you need to follow. These are the steps you need to follow. Step number one. Number one, you should be able to tell the market direction. Number two, you should be able to tell valid zones. Number three, you should be able to tell to draw a channel that the market follows. Number four, you should identify what? A psychological zone or a psychological level where the market will react from. Then number five, you should identify, you should just place you take your trade, or you set your buy. Now set your buy or sell limit. Now, five those are the five simple steps you need to have in mind when now analyzing this market. Now you come the first, now this is how you check. This is just a checklist. Yeah, number one, what do you want to see in the market and tell what the market is doing? Number one is the what. So here, let me just add number one, we should have the uptrend. Number two, we should have the downtrend. Number three, okay, number three, we should have the range, ranging market. So those are the things you need to have. Now this is your checklist. The first thing, what do you have to see in the market is the direction of the market at any time frame. So these under 24 hours, under 8 hours, under 22 hours, 1 hour, no matter the time frame. The first thing, if it's on a lower time frame, now you will be scalping. That is 1, 2, 3, 4, 5, 6, 1, 2, 3, 5, 10, so 15 minutes and below, or even 30 minutes and below. This 15 minutes and below, you'll be scalping. From 30 and above, now you'll be swinging. So these are the factors now you should consider before taking that trade. Yeah, hope it's recorded. Nice. These are the factors you need to consider before taking that trade. Now, the first thing is the what? The direction of the market. Direction of the market direction, basically, we have three: uptrend, downtrend, and ranging. So these are what? These are clear uptrend. After identifying these an uptrend, what should you focus next on? Is the number one, okay, number one, uptrend has taken the point, you mark. Then you go number two, is it the valid zones? Now, the valid zones, these are the zones the market changes direction from. Yeah, now this becomes your valid zones. Now this becomes your valid zone. Now these are your valid zones. Now that's step number two. We have already identified the valid zones. So valid zones basically is where the market is changing. Yeah. Now this is the impulsive move, the retracement or the pullback, impulsive pullback, impulsive. Now those are the zones we focus on drawing our what? Our zones. These are valid zones. Now we draw a channel. Now this is the market moving, and a channel basically like saying it's a rod. Since once the market is moving in such a manner, now it's just a matter of you connecting these zones, valid zones. And how do you do that? You take this, you come here, there is this parallel channel. Yeah, take it now, connect the upper zones and drop it down to the lower zones, and this is how you'll achieve your channel. Yeah, so this one is from uptrend. Once this is a channel, now you have to identify psychological zones. I'll show you that, and set your buy or sell limit. I'll also show you that. So this is the first thing. Now we go to the next one, on a ranging, on a downtrend. Still the same thing. Now this is an uptrend. Now we focus on a downtrend. And when a market is moving on a downtrend, this is how the market moves. Now you go again back to your checklist. The direction of the market is a clear what? Downtrend. Clear downtrend, okay. Now we go to the next. The valid zones, of course, these are your valid zones. These ones, you mark them out. You mark them out. Now, this being your valid zones. this being your valid zones. Now we go to step number 3. We draw a channel. A channel is just connecting these zones. Now you take this, you connect those levels and drop it down. You'll achieve a very should be at the support and the resistance trend line. Yeah, so that is your channel. Once it's like that, then boom, this is a valid channel. These are the places where you should be looking to buy and sell. These valid zones, these are the places you should be looking to sell from and also buy from. So from here, expect the market to push down up to this level. So you'll have to see a confirmation here, get a confirmation here, then take that trade. Now, identify a psychological level. Now, these levels, most likely they are usually there on those valid zones. This is where they are. Now, from those places, now these are the places you should be looking to take your trade from. Yeah, I'll show that on real market on how to draw them or on how to transfer them to this chart. Now you set your buy or sell limit. Now from here we will buy. Now you come, you set your buy, you target the next to the next, you target the next one. But when we are on a downtrend, we most likely we focus on sales. You should be looking for selling opportunities. When you're on an uptrend, you should be looking for buying opportunities. Now this is what you should know. Yeah, so next we go to arranging market. How does our arranging market look like? So for arranging markets, we know the market will play around with two levels, the support and the resistance. Yeah, for arranging markets. Now this one is for arranging market. So that is number one, the market direction. Market is ranging. You open your chart, you say, okay, the market is ranging. What is the next step? Now I focus on the what? Valid zones, number 2. And these are your valid zones. And I can tell you for free, these things happen, these strategy happen in all moving charts. Whether Bitcoin, USD, whether gold, whether any pair, it works. So from there, now you draw your channel. You come, you take your channel, connect those levels, then boom, then you get a what? These are road the market is following. Now these are places you focus on buying. This zone you focus on buying. You focus on buy, you target the next one. Then here you focus on selling. You target the you focus on selling, yeah. Stop loss slightly above the what? Above the zone. So now this is just a picture. This is just a picture perfect of the strategy. But when it comes to the market, it does not usually occur like this. So now let's go to the market and let me show you how it is. So you should have this in mind. You should have this in mind when we are going to open the chart. We should have this in mind. The direction, uptrend, downtrend, ranging, the valid zones, draw your channel, identify psychological zone, then set your buy limit or sell limit. Now we go. So now let's go to the market. Now on the market, now I can remove now all of this and open the chart. So this is boom 1000 in synthetics recording. So this is boom 1000. And for example, what if you could have opened your chart here, what could be the first thing you're seeing? These are clear what? Ranging market. And if it's a ranging market, you identify the valid zones. These ones, these were your valid zones. And if you could have connected your channel, these are the places you should be focusing on. What? Taking my buy, taking my sell, taking my sell, taking my sell, taking my buy. And you could have got this beautiful trade. Yeah, so that is a ranging market. Now we come here. Okay, these are what? If you could have entered your market and see, okay, the market is giving me some sort of uptrend. Now you define the value zone. 1, 2, these are 3, these are 4 here. Now these are 5. So this is just a demonstration to show you guys how it works. So this now how it could be. Now from this level, you could be focusing on taking a buy from that level. So this is a clear uptrend. The first step, direction of the market is a clear uptrend. The second step, the valid zones, these are the valid zones. The third step, connect the zones, you connect to the channel. Then next, you draw your channel. After drawing your channel, now you focus on taking your buys. After knowing where the psychological levels are, now you focus on taking buys of these levels. And you could see how the market pushes. So here, you can see how the market pushed impulsively from here, also from here, from those levels. So now let's do the downtrend. I'm just doing a random to show you guys how you identify this. So for example, these are clear what? These are clear downtrend. That is the first thing. The second thing, now you draw your valid zones. These are your valid zones. Yeah, these are your valid zones. Next, you draw your channel. And once you use this parallel channel, once you connect the at least two, once you drop it down, it will automatically give you the rest. So it's easy for you to know which is the next zone which is valid. Yeah, and you can see the market pushed. These are clear downtrend. Also, with using this strategy, you can tend to know the trend of the market, and also you get to know which decision you're making once the market taps on your point of interest. So these are clear downtrend, and what is the market doing? From those levels, you can see the reaction from those levels. These are the key zones. From those levels, market pushed, what came down. From here, gave us a push. So you just secure a capital when market pushed down. No hala, it's still good, yeah. So now, having gone through the key things on the markets, now let's do the top-down analysis on this beautiful trade, yeah, on this beautiful chart. So boom 1000, the first thing, you should identify the direction of the market. Now the overall direction of the market, you do a top-down analysis, which means we start from a higher time frame going to the lower time frame before you take your entry. So I'm just gonna zoom in. I'm gonna zoom now. From what we see here, I can see the market is moving on a clear uptrend. Overall now, I don't focus on one point, I focus on the overall. What can I see overall? Now, from what I can see from overall, the market is clearly moving on a what? On an uptrend. Now, I connect these zones. These are point of interest. There are no noises. A place where there is no noise. These are the point of interest. Now, having those 4 points, I can easily now connect them. Connect 1, connect 2, and now drag it down. is here, even there. Here can be a fake, even we can call it a fake out, but still the market came back in, but it's a valid zone. From there, the market pushed. Now, having done that, the other thing, if you want to know if your channel is valid, take note of this. Take note of this level, this middle line here. You'll find the market most likely respecting it. From there, the market will be respecting it. There will be reaction from that zone. Yeah, take note of that. So under 24 hours time frame, we see, okay, the market is giving us a what? A clearly bullish trend. Now we go to lower time frame. Now we go to 8 hours time frame. Under 8 hours, now we try and check what can we see. What can we see from in this chart? Now from here, I can easily say this one is a clearly uptrend, and from that uptrend, what are the key zones? You can see these ones. These are the key levels. This one. So just mark them out. Just mark them out. Mark them out. Yeah, mark them out. Now draw the what? The channel. So I can connect those, then come down. I can also connect this one. And to see if it's valid, now I can easily see here it started from this level. So 1, 2, it came back here, pushed up to this one, came down from this level. Why? The market pushed from the level that I just talked about, from the middle line. From there, the market pushed down, went up to the resistance of that channel, then the market started pushing down. This is boom 1000 top down analysis. Now we go to a 4 hours time frame. We're just trying to know how is the market moving. Under 4 hours time frame, what can we see? So previously, we can tell, we don't leave any information behind. We can tell these are clear ranging market as I did the analysis before. These are what? This was my ranging. This was a ranging market. Identify the valid zones. Connect them. Yeah, connect those levels. Boom. And you can see how the market played around that zone. Yeah, so you could have known where to buy and when to sell. Having these zones, you could know, okay, the market was going to buy from this level, the market was going to sell from this level. And that is it. So now the market came up to this level. From this level, now the market bought, and the market pushed up to the resistance. So this is a very good trade. Now market is here. Now what is the next movement from here? What can we tell will happen once the market tap this level? Now we go to 1 hour time frame. If you can't see a good channel or anything, just avoid that. So here I can easily see the market was making a what, and clearly up. This one was also a clear uptrend after so I have not taken note of the valid zones, but they are there. You should have them in mind. If you connect at least two, the channel will give you the rest automatically. You just need to scroll it down and you'll find the rest. So that is the channel the market followed. Now from here, the market broke out of the channel, then started making a down movement. Now we go to 30 minutes. we want to tell the direction of this. Now, this is under 30 minutes. What can you tell? The market is in a clear downtrend. Still, I can connect this level. Still, I'm using the same thing, the same channel to analyze. See, from top down, this is a top down analysis using the channels. You'll find that it's easy for you to be getting first hand information. This one was on a higher time frame. Now we have narrowed to lower time frame. Now these are the zones. These are the levels. Yeah, these are the levels the market reacted from. And if you want to see if it's valid, I've just talked about this. Just check how the market was respecting that. Check how the market was respecting that middle line. Yeah, this is the place the market was respecting the middle line. Yeah. So here, once the market hit this double middle line here. There's this for the higher time frame and there's this for this 30 minutes time frame. So what do you expect once the market come here? Still, we go down. We narrow down to 15 minutes time frame. We don't leave behind any information. Yeah, now we're here. What can we tell from here? The market is kinda in a ranging. The market is kinda in a ranging, but still there are no more confirmation that the market is ranging. Take a look at this market. Yeah, no. So okay, let's not even consider that. Let's now take this trade. From here we see the market tapped on this level, then pushed down. From here we know already the market is and we our next point, or the market can decide to react from this level. Now the thing, we just have to wait for the market to do what it wants to do. Then push up, then push. We don't know, but we want to get the first-hand information to help us now identify the next level. Now that's where now the one that I've talked about. Now this is where now I use the psychological level. If I get my psychological level there, now I'll know very well that this market will react from this level, give me a spike up to this level, then push down. Yeah, so let's go now to that channelization. Now this is boom 1000. Now this is a Tango. This is software. Most of guys will hear me talking about it. Now this is the software I use to tell where most buyers and most sellers are. Yeah, these are the places where once you take a buy, you know the market will move impulsively in your direction. So for example, this under okay, this is now under 4 hours time frame. You can see how the market react from this. You can see how markets react from this level to mean that these are the levels where most buyers and most sellers are. And it's automatic in that if the market moves, the software generates for you the levels automatically. So there's no need for you to be drawing them. So it's just for you to just come check. If there's a level there, look for strategy there, then take a buy or take a sell. And that's how it has been helping us to take our trades So here now they are not formed, but they are above, yeah. So it moves with the market once, and you can see how the market reacts once it taps on it, yeah. So now, having said that, now you can see from here, I was saying I'm expecting a buy from this level. It was from this level. Here you can get some spikes, then the market will definitely push down. But overall, we know the market is moving in a downtrend channel. So if we could have got it from the level, if you could have got it from this level, now this level is at 157.05, yeah, 157.05. If you come here, then check 157.05. Now you get this one. Yeah, now you'll get the market now is at this, resting at this place. So from this level, okay, the market is now selling from here. If you could have taken that sell from here, now you can see how the market respected that zone, then boom, push down. Yeah, so the market will still sell. Now you're sure of that trade. You are sure of this beautiful trade. Yeah, so this is the top down. So I'm expecting the market to come up to this. This is boom 1000, and you can set your limits and you hold your trade up to that level. Now this is how you do the top down analysis, guys. And with the use of with the help of this software, you can tell where the market will react from and where the market will be buying and selling from. So thank you guys for your time and hope you have learned something. For more information, join this group here, Forex Nexters. Join that group, Forex Nexters. Then from there we can learn more together. I usually drop signals here. Yeah, it's a new, and still I use the same strategy to analyze the market, you see. And this was before. For example, this was our before. You can see the after. This was boom 500, and you can see how we catch the spikes. This is how we trade now. This was volatility 75.1s before, and so far so good. So make sure you join that group, guys, and let's learn together. Thank you for your time.